Our next guest just lowered his S&P target for the year end to 5,600, down from 6,800. Julian Emanuel, Senior Managing Director at Evercore ISI. So this was a game changer for you.
Yeah, I mean, look, if you're going to announce what was announced on April the 2nd in the sledgehammer form, and you're going to put in numbers that are higher than Smoot-Hawley, the obvious effect is going to be much more market volatility, much more uncertainty, which we've gotten. And, you know, frankly, the questions I'm getting is, why is it that you aren't going to a recession base case economically? And why is it that you're not going to a recession in terms of earnings? And our view is that as someone who wants to think about the market, there are two things you need to believe in higher stock prices this year. First off, that we are approaching the level of peak uncertainty with regard to the trade issues. We do believe that to be the case. Obviously, it's ratcheted even higher in the last several hours. And then the other is that Washington does not wish to precipitate a recession. Okay, because there are lots and lots of consequences.
They seem okay with
Hold on a
that.
second. This is a policy team that seems to think that recession is, sorry, this is an administration that seems to have indicated that recession is a policy potential, or that it's essentially it is policy, right? I mean, I guess, so my question to you is then back to the markets, because I hear what you're saying. You're being cautious, and you always are, and I think you're right to be. But on a day when stocks, bonds, and the dollar sold off, you and I have spent a lot of time looking at emerging markets. That's kind of what this feels like. And this is a market that today, to me, felt like a market that's always a discounting mechanism. Felt like it was really discounting significant, I think, loss in revenues in terms of a tax structure and a dynamic that I think are the result of where we are 2 or 3 chess moves down the road. So I guess back to earnings season that's coming upon us. I mean, how do you begin to even calculate this?
It's very difficult, Tim. And the fact is that results for this earnings season are completely meaningless. There's no importance to them whatsoever. What it is basically CEOs' willingness to, and not even project forward to the current quarter, to lay out a number of scenarios in terms of what to expect for the rest of the year and 2026. And frankly, the message should be that the attempt to make this transformation is something that, economic wreckage is going to make it much more difficult globally to achieve the desired ends.
I mean, Julian, one thing that brings to mind about all this is that something always comes to town. It's tariffs, or it could be COVID, or it could be September 11th. It's a convention, and it's a new one, to have a price target in the first place, right? The Dow was what was referred to, not the S&P, until about 1992, as you will know. And then price targets started appearing for individual companies, but not widely disseminated, and then for the market. And now every firm must have a price target. It's arbitrary, 12 months versus 11 versus 13. And you know this too, things come along, tariffs, and it makes the whole model, blown up. Just as you said, earnings could not be more irrelevant this coming quarter. So why not abandon the convention? I mean, why do it?
It's a reference number.
I think it's a comfort blanket. People like to think, this is where they think the market's going. And here's the other thing that's inconvenient about it. Since this has been tracked, and you know this as well, all strategists put out a price target, and it's always calling for higher. Never once as a group have strategists called for a lower stock market. Not in any year. I think the whole thing is borderline silly. And it has nothing to do with you personally. I was a strategist on a fundamental side, now I'm a technician, but I never understood it, and I still don't. And I'm almost 60.
Well, I will say this, Carter. Go back and look at a chart of the Dow Jones or the S&P going back to 1982 and think about the last, 40-odd plus years calling for a higher target year in and year out has been an extremely winning strategy.
Right, but guess what those targets are? They're always 10% higher, which is the average growth of the market over the last 100 years. So I just don't see the value in it, and it's nothing to do with you personally. We've known each other a long time. I'm just saying something that has always been a mystery to me, and I'm still trying to figure it out. I thought someone might have an answer.
Well, no, but I think it's interesting that your target is higher than we are right now, even though you've turned bearish. So you think we're going to rally?
We do. And as I said, it's predicated on the idea that the administration will, in the final analysis, not tolerate a recession. Because if you think about it, the most important piece of legislation that needs to get passed is the budget and the debt ceiling. And frankly, we all know that that's going to require every Republican to row in the same boat. And there's a lot of Republicans that have never voted to raise the debt ceiling. And I would suggest that it's going to be easier to get that accomplished with an economy that's moving in the right direction than one that is, on the precipice of moving in the wrong direction.